Hi guys, this is Andrew for Trendlines.com. So for those who are watching my videos for the first time, I've been working as a professional trader for the past 6 years in Hong Kong. And I'm right now doing some YouTube videos where I show you how I use technical analysis to build up my scenarios and set up my trades. So if you guys want to know about all this stuff and basically how to make money on the markets, you are in the right place. So in today's video, I want to use Elliott Wave principle applied to AMC and show you guys all the different financial data that we can use to build up our view. Let's get into it. Alright guys, so I did my last video on AMC 1 or 2 days ago. So I'm using here the market data of Wednesday night. So maybe I'm gonna have a bit of delay. I'm sorry about that. I'm working, so I don't have time actually to do daily updates. Maybe one day I will. So let me just quickly sum up the situation here, and we are gonna do some Elliott Wave counting and try to see if our view is actually fitting what we see on the different data, and we're going to see if our view is actually fitting the other information that we get from the financial data, like the option open interest. So here, let me very quickly sum up the situation for the Elliott Wave counting on the longer term. So let's start on the daily time frame. We have this strong crazy move up here. You can call it a short squeeze. To me, it was not a short squeeze because the short interest didn't decrease that much during this period. All right, I can show you guys this. Okay, AMC short interest. So here you can see that this crazy rally occurred between the 15th and the 29th of Jan, and the short interest in million of shares moved from 45 million to 37 million. So only 7 million shares were brought back by shorts during this time. So this is not enough to create a short squeeze. 7 million shares on AMC is not enough. And this is the reason why, to me, this was not a short squeeze, but just a very strong rally. So we had this strong move up. Then here we have our ABC correction. Totally makes sense. Typical ABC. The C wave a bit longer, this is something that I often see. It's not what you would see in the books. They usually might like to, show you like perfect ABCs like this. All right. The reality is that you sometimes have some very strong and intense AB waves, and then the C wave is a bit longer but deeper. This is something that we are used to see when we do Elliott Wave counting quite often. So here, then we are looking for another 1, 2, 3, 4, 5 guys. So I put this one in blue. And I use all my technical analysis to actually help me to find the levels of this 1, 2, 3, 4, 5. And we have been in the second corrective wave for the past month, between the 18th of March till the 15th of April, roughly, where we had this breakout that I gave you guys. We've been in the second wave. So right now we are in the third wave of the third wave of the third wave. So let me zoom in a little bit. Then I'm going to tell you why the third wave is going here and why the fifth wave is going here. But first, let me zoom in. Okay. So once again, this ABC is complete because we broke here the trend line, we retested it, which is confirming us that we were actually checking the right thing, the right trend line. We have all our bullish divergences that I told you guys about. I'm not going to go through this here again. Then here we have our beautiful, so to see this one, you need to go on an hourly time frame. So here we have our beautiful 1, 2, 3, 4, 5. That is complete. We corrected with a nice ABC. And I was telling you guys in my previous video that, 1060, 1050 would be the support. And we have one more at 1020. So the C wave could go to 1020. It could still be valid. And especially here, we have this 200 period moving average coming here. So I'm expecting the 200 period moving average on the hourly time frame to hold the price here. I think this is going to act as a strong support, and I'm expecting the wave counting to keep developing on the upside. So here we're probably going to correct until the 29th of April maximum. I told you guys in the video I posted a few days ago, I'm expecting a bullish run here. So I'm not sure if we had it or not when I'm actually posting this one, but I can give you my scenario. So 1, 2, 3, 4, 5, ABC. Then here, so this is a 1, this is a 2. We're gonna have a 3, something like here. Okay, 3, 4, 5. This would be the typical case. So once again, this is very, a precise scenario. So the probability it would be 100% correct is quite low, but this is what I would see AMC doing in a typical situation. Then a correction. So here we had a zigzag. So here I would expect a flat correction. So something like this. Okay. A bit the same length in time. Sometimes the second wave is shorter. So the fourth wave are usually a bit longer. It could be also a triangle. So we would analyze what is happening here. And then the fifth wave going here, guys. So why here? Because it's the maximum level that we had on our fifth wave of the first move up. So this is the reason why I think that the third wave might go here. Then we would correct. So once again, we had here an ABC. So in a zigzag pattern. So I'm expecting here, once again, to have a longer correction as this one, maybe even longer. Maybe it would be something like this, guys, all right? In this fourth wave, we usually remain above this one. So we would stay above 15, probably, if we go there. And we would also usually correct till the top of the third wave of the preceding wave. So it's a bit complicated to process, but basically it would be around here. So this is actually maybe giving me maybe something like this. So I would have this at the same level. Okay. So this is something that would make sense. So let's see what is happening here, guys. But even if we go higher, we will ultimately come back here to get some more liquidity before making the last strong move up that would then go to 35. Now, why my scenario is that bullish? So of course, I gave you here a lot of information that is just coming from what I usually see, that is coming from the Elliott Wave principles. But I also use some financial data like open interest to see if the market is going in the upside direction or not. Let me show you this. So for those who remember, I showed you guys in my previous video that so AMC was a bit lower. Okay. And here, go check it out, guys. This is the total short interest. So maximum synthetic short interest if all the call options are in the money. So for example, if AMC goes to 100, then the synthetic short would be 15%, which is this number. And go check the video I did last week, guys. This was 12%. So it grew by 3% of the total number of shares, which is a lot. So basically 0.03 times a share. So now it's 11 times the total number of shares. So guys, it's 100 million USD. All right. So 100 million USD more coming on the synthetic short market. And it's not even this number that is, telling me that we are bullish. It's just that I can see it growing. I can see it going in the same direction for quite a long time. And the 40 strike here is still quite high, like in terms of number of shares. And we also have all these strikes around like between 10 and 20. You can see here, those are the levels where I have the more options. So this is going to create some gamma. This is going to create some bullish momentum. Once again, guys, the typical, so if we go to 12, for example, this is growing. You can see we're going to 6%. And once again, guys, the typical one is, for example, like Apple, the typical synthetic short interest is around 0.6%. So when you have something close to like 5-10% and that can go up to 15%, this is giving you the information that we are bullish. And last thing I wanted to show you guys, okay, people are wondering why AMC corrected. For me, the second wave of Elliott that I showed you here that we just had recently, we lost around 12% compared to the highest level we had on the 27th of April and the level we have on the 28th of April at the closing market. And analysts always try to understand. For me, it's just like, healthy correction, but there is a rumor that AMC would finally emit some shares. So why AMC stock is down on Wednesday, and they're saying that basically the company needs to pay some debt and that they're gonna maybe emit 43 million additional shares, so which is around 10% dilution. So I'm not sure if they did it or not. The AMC CEO said he would not emit more shares. Actually, maybe they do. This is not so important, guys. You know, this is not a market movers to me. What would be important is that we're gonna have on the 6th of May the results, the earnings, first quarter earnings announced by AMC. So we're not expecting something very huge here, but this could be catalyst that helps the price action to go higher. So let me show you guys my counting again. So I'm taking a lot of risk, guys, because I'm giving you, you know, my view, very detailed, that is, you know, in a very long time. So let's see if things go in the direction I'm expecting. Let's see if actually this scenario is confirming or not. Once again, this is very bullish. We would need some volumes to kick in order to see this scenario happening. But for now, I have all the signals that are pointing in the same direction. If I have different signals, like some, you know, bearish divergences, or if I see the volatility of options going lower, or if I see some important levels that are not holding, I would, of course, let you know. So I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.